Welcome to our Global Market Strategy Report for the week of May 25, 2026. This is set to be a massive week, defined by a high-stakes clash, the persistent threat of stagflation versus the relentless boom in AI. We are seeing major volatility, from Dell's impressive 42% surge to shifts in gold, as the market navigates this true game-changer. Turning to our market overview, the week was defined by two opposing forces. We saw progress in Middle East ceasefire negotiations, while U.S. macro data pointed toward stagflation. Despite a quiet Monday for the U.S. holiday, the latter part of the week saw significant asset rotation. Key movers included WTI crude, which fell over 9% on Peace News, while the S&P 500 climbed 1.43% on strong AI demand, proving the resilience of the tech sector. In equity markets, AI-driven resilience remains the theme of the hour. Indices are hitting record highs as corporate earnings outpace macro concerns. Dell Technologies saw an incredible 42.59% surge following a massive earnings beat in AI servers, and Snowflake rebounded strongly as valuation fears subsided. Meanwhile, the Nikkei 225 hit new peaks, though we remain cautious on retail sectors like Walmart, where inflation is clearly hitting consumer sentiment. The bond market is sounding a clear alarm on stagflation. U.S. GDP growth for the first quarter was revised down to 1.6%, and disposable income is shrinking. At the same time, core inflation remains sticky at 3.3%. This combination of cooling growth and stubborn inflation has compressed real yields to just 0.64%, which serves as a powerful catalyst for gold. Moving to foreign exchange, we are seeing a disconnect between intervention and structural reality. Despite Japan's record $73.5 billion intervention, the JPY remains fragile, proving that structural trade shocks are winning out. The euro is also softening as the market looks toward an ECB rate hike, while the dollar index stands firm, as the U.S. economy continues to outshine its major peers. In commodities, we see a clear divergence. Gold has rallied to record levels, with investors pivoting to it as a vital hedge against stagflation. Conversely, oil has seen a major crash, with WTI dropping nearly 10% after news of a potential U.S.-Iran ceasefire removed the risk premium from the Strait of Hormuz. Turning to J-Rights, fiscal policy is front and center. Prime Minister Takechi's announcement of a 3 trillion yen supplementary budget pushed JGB yields higher, impacting valuations. However, market correction has pushed dividend yields to a compelling 4.98%. Specifically, GLP J-Right is showing signs of a strong recovery, as logistics demand remains robust and institutional yield hunters step in to lock in those attractive dividends. A major regime change is underway at the Federal Reserve with the inauguration of Kevin Warsh as the 17th FRB chair. Warsh has signaled a departure from the Powell era, planning to accelerate quantitative tightening, including the sale of mortgage-backed securities. His challenge will be immense, balancing President Trump's desire for cuts against the reality of stagflation, all while maintaining the Fed's independence through a likely hawkish stance. Looking at the calendar for the week of June 1st, we have critical data points ahead. Pay close attention to Monday's ISM manufacturing data for signs of margin pressure, and Friday's U.S. employment report. A slowdown here could be the definitive confirmation needed for a rate pivot. Finally, keep an eye on the OPEC ministerial meeting on Sunday to see how they respond to the recent oil price volatility. To wrap up, here are our Q3 strategy recommendations. In equities, stay selective, buy quality AI leaders like Dell on the dips. For bonds, we recommend accumulating long-dated U.S. Treasuries as growth slows. For real assets, we maintain a firm overweight on gold as your primary inflation hedge. And finally, in real estate, look at blue-chip J-Rights like GLP to lock in those high yields while the market stabilizes. This report utilizes professional imagery sourced from Stockcake and Vecteezy to illustrate the evolving financial and industrial landscape. Thank you for your attention.